Welcome back to our channel. Most people hear W-2 and 1099 and think it's just about being an employee versus being self-employed. That's only part of the story. The real difference is how income is taxed, when taxes are paid, and who is responsible for paying them. Let's break this down clearly. A W-2 worker is an employee. A 1099 worker is not considered an employee. A 1099 worker is considered self-employed even if the income is part-time or a side hustle. That single distinction changes everything. If you are a W-2 employee, your employer handles much of the tax process for you. Taxes are withheld automatically from your paycheck. This includes federal income tax, Social Security tax, Medicare tax, and often state and local taxes. Your employer also pays half of your payroll taxes. Social Security and Medicare taxes together total 15.3%. As a W-2 employee, you only see 7.65% withheld from your pay. Your employer pays the other 7.65% on your behalf. You never see that money, but it is real compensation. At the end of the year, your employer issues a W-2 form. This form reports your total wages and how much was withheld for taxes. Filing taxes as a W-2 employee is relatively straightforward because much of the work was already done through withholding. Now let's look at 1099 income. If you receive a 1099, no taxes are withheld by default. No federal income tax. No Social Security tax. No Medicare tax. All of that responsibility shifts to you. As a 1099 worker, you pay the entire 15.3% self-employment tax yourself. There is no employer paying half. You are both the employee and the employer. On top of that, you still owe federal income tax and possibly state and local income taxes, depending on where you live. This is where people get caught off guard. A 1099 role often looks like it pays more, but the tax structure is completely different. If you don't plan for it, tax time can be painful. Another major difference is when taxes are paid. W-2 employees pay taxes gradually through paycheck withholding. 1099 workers are expected to make quarterly estimated tax payments during the year. If those payments aren't made, the IRS can assess penalties and interest, even if you pay everything later. Now let's talk about expenses, because this is another major difference. W-2 employees generally cannot deduct unreimbursed job expenses. If your employer doesn't reimburse you, you usually absorb the cost. 1099 workers can deduct ordinary and necessary business expenses. That can include equipment, software, supplies, mileage, or a qualifying home office. These deductions reduce taxable income, but they do not eliminate self-employment tax. This isn't a loophole, it's just how the math works. Benefits are another big distinction. W-2 employees may receive health insurance, retirement plans, paid time off, workers' compensation, and unemployment insurance. 1099 workers typically receive none of that. You are responsible for your own insurance, retirement savings, and income stability. So which one is better? Neither is inherently better. They are different systems with different trade-offs. W-2 income offers stability and built-in tax handling. 99 income offers flexibility and potential deductions, but far more responsibility. Here's the most important takeaway. A 1099 dollar is not the same as a W-2 dollar. If you don't adjust for taxes, benefits, and expenses, you will misjudge income and make bad decisions. Understanding this difference matters before taking contract work, starting a side hustle, leaving a W-2 job, or combining both income types. Now that you understand how income is taxed depending on whether it's W-2 or 1099, the next layer to understand is who is taxing you. In the next video, we'll break down federal, state, and local taxes, what each one exists for, who controls them, and how they actually show up on your paycheck. If this information was helpful, hit the like button, subscribe, and share it.